Yes, a very good morning to all of you. Right, so which chapter have we started with? Right, the company audit, in which we saw a few sections of the Companies Act 2013, starting with section 141, which is regarding the qualifications and the disqualifications of the company auditor. Right, what are the qualifications for the company auditor? Right, who can be appointed as an auditor? An individual who is a chartered accountant, but chartered accountant holding a certificate of practice of the ICAI, or a firm where majority of the partners of the firm are chartered accountants practicing in India. That is 141 subsection 1. And what is 141 subsection 2? A firm includes an LLP, but only those partners of the LLP are authorized to act as an auditor who are the chartered accountants. But more interesting and important than the qualifications are the disqualifications of the company auditor, 141 subsection 3. And we have the 9 disqualifications of the company auditor, and before the 9 disqualifications we have a common statement over there. A person shall not be eligible for appointment as an auditor of a company if, when not eligible to be appointed as an auditor of a company, if it is a body corporate other than an LLP, then officer or employee of the company, a person who is a partner or who is in the employment of an officer or employee of the company, then person, partner, relative holds any security of or interest in company, holding company, subsidiary company, associate company, any other subsidiary of that holding company. However, relative can hold the security up to the face value of rupees 1 lakh, that too only in the company. If relative exceeds the limit, grace period has been given for taking the corrective action within the 60 days. That is 141 3D1, holding any security of or interest in. Then 141 3D2, it is regarding the indebtedness exceeding rupees 5 lakh. So all the 3 in all the 5, person, partner, relative in all the 5 companies, up to rupees 5 lakh indebtedness allowed. 5 lakh 1 rupee disqualified to be appointed as an auditor. And 141 3D3, it is regarding the guarantee exceeding rupees 1 lakh. Right, so all the 3, person, partner, relative in all the 5, guarantee up to rupees 1 lakh will be allowed. Right, then 141 3E, a person or a firm is having any business relationship now with 6 companies: company, holding company, subsidiary company, associate company, any other subsidiary of the holding company, or any other subsidiary of the associate company. However, what does it mean by business relationship? Commercial transactions which are entered into for commercial purpose. But what are the exceptions? Which are the commercial transactions which are allowed? One, as a for rendering the professional services as specified under the Chartered Accountants Act, and second, as a customer in the ordinary course of business, and that too at the arm's length price. Right, then 141 3F, relative is a director or is in the employment as a director or a key managerial personnel of the company. Right, then 141 3G, CA is in full-time employment elsewhere, right? So CA is full-time employment elsewhere. Can you take any company audits in his name? No, you cannot take any company audits in his name. And apart from that, holding the audit of more than 20 companies, right? So if one CA is already doing the audit of 20 companies and this is going to be the 21st audit, then he is disqualified to be appointed as an auditor. But while counting this limit of 20, which are the audits which are not to be counted? Excluding the audits of one-person company, small company, dormant company, private companies having the paid-up share capital of less than 100 crore, provided there is no default in the filing of the financial statements and the annual return with the registrar. Right, then 141(3)(h), person convicted by a court for an offence involving fraud and a period of 10 years has not elapsed from the date of such conviction. And 141(3)(I), a person directly or indirectly provides the services specified under section 144 to 3 companies. Which are the 3 companies? Company, holding company, or the subsidiary company. And then we came to section 144. What is section 144? Auditor not to render certain services. Right, so other services to be rendered by the auditor of the company have to be approved by the audit committee or the board of directors, as the case may be. But it cannot include the following services. Which services it cannot include? Accounting and bookkeeping, internal audit. Design and implementation of financial information system, outsourced financial services. Investment advisory services, investment banking services, actuarial services, management services, and any other kind of services as may be prescribed. Are you getting that? Okay, right. Then audit committee. Is every company required to constitute an audit committee? No. What do we have? What do we have? The applicability of section 177. What does it say? Listed companies always applicable. Apart from listed companies, every public company having paid up share capital of more than or equal to 10 crore, or having the turnover of more than or equal to 100 crore, or having in the aggregate the LBDD. You remember LBDD? Loans, borrowing, debenture, deposits of more than or equal to 50 crore are required to constitute an audit committee of the board of directors. Okay, right. And then we studied section 141 subsection 4. Does anybody remember that? Right, if none of the disqualification should be attracted as on the date of appointment. If it is attracted as on the date of appointment, the appointment is void ab initio. But if any of the disqualification is attracted after appointment, the auditor shall vacate his office, and such vacation shall be deemed to be a casual vacancy in the office of the auditor. Right, so that was regarding the qualifications and the disqualifications of the company auditor. Okay, it's not getting changed. Is there any staff outside? Yeah, can you come to the screen? Right, so that was regarding section 141. Then after section 141, we came to section 139, which was regarding the appointment of the company auditor. And what did we say? Appointment of the company auditor, we discuss it under 2 heads and 3 heads. What are the 2 heads? The appointment of the other than government company auditor and the government company auditor, and then the appointment of the subsequent auditor, appointment of the first auditor, and the appointment of the auditor in case of the casual vacancy, right? And for the first auditor casual vacancy, we write down over here BOD, members. Then we write down over here the C and AG, the BOD, board of directors and the members. Okay. And then after that we have a number. What is the number? 396363. Do you know that? 30, 90, 60, 30, 60, 30, 3, 30, 30 and then dash. Okay. Right. So 30, 90, 60, 30, 60, 30, 3, 30, 30. Now the first auditor, are you getting the point? The first auditor, he is appointed after the registration incorporation of the company. Now routine course, who appoints the auditor of the company? He is appointed by the members. So from the first AGM onwards, the auditor will be appointed by the members. But till that time, what does it say? First auditor, who has the power to appoint the first auditor? The board of directors. Within 30 days from the date of registration of the company can appoint the first auditor. However, if the board fails to appoint within 30 days, then the members can appoint within the 90 days at the EGM. And this auditor appointed by the board or appointed by the members will hold office till when? Till the conclusion of the first AGM. So do you understand tenure? Okay, till when is he the auditor of the company? First auditor, once appointed by the board or appointed by the members or appointed by CNAG board or the members, he is the auditor of the company till the conclusion of the first AGM, and thereafter that will be the subsequent auditor. Are you understanding that? Right. And that if there is any casual vacancy in the office of the auditor, to be filled in by the board of directors within 30 days from the date of the casual vacancy, and the auditor so appointed will continue till the conclusion of the next AGM. However, if the casual vacancy is due to the resignation, then it also needs to be approved by the members at the EGM within 3 months of the recommendation of the board. Right, within 3 months of the recommendation of the board. And casual vacancy in case of the government company to be filled in by the CNAG within 30 days. If CNAG fails to fill within 30 days, then will be filled in by the board of directors within the next 30 days. Are you understanding this, everyone? Right. So that's regarding the first auditor and the casual vacancy. Then in case of the government companies and also in case of the deemed government companies, what does it say? The C and AG will appoint the subsequent auditor within 180 days from the commencement of the financial year, and the auditor so appointed will hold office till the conclusion of the general meeting, right, the AGM. And then subsequent auditor in case of other than government company, before the appointment of the auditor, the written consent certificate is required to be obtained from the auditor, and then the auditor will be appointed at the AGM, who will hold office from the conclusion of the first AGM till the conclusion of the sixth AGM, and thereafter till the conclusion of every sixth meeting. And then the company will inform the auditor, and company will also inform the ROC filing form ADT 1 within 15 days of the appointment of the auditor, right, within 15 days of the appointment of the auditor. Right, so when we talk about this first AGM to sixth AGM, what concept are we talking about? We are talking about the concept of the rotation of the company auditor. Are all companies required to rotate their auditor? No, we have the applicability of section 139 subsection 2. Right, what does it say? Listed companies, always applicable. Apart from listed companies, the unlisted public companies having paid up share capital of more than or equal to 10 crore, or all the private companies having the paid up share capital of more than or equal to 50 crore, or all companies having the borrowings or deposits of more than or equal to 50 crore cannot appoint an individual for more than one term of 5 consecutive years, and cannot appoint a firm for more than 2 terms of 5 consecutive years. And after this 1 term or 2 term is over, after that there is a cooling period of the 5 years, right? So cooling period of the 5 years. Common partner, does that firm also need to follow the cooling period of 5 years? Yes. Then you leave from this firm, retire from this firm and join another firm. Even that another firm cannot do the audit for the 5 years. And even all the members in the network firm, they cannot do the audit for the 5 years. Can the auditor be removed before 5 years? Can he resign before 5 years? Yes, that is always possible. Right, then who will decide the rotation of the engagement team members? That will be decided by the members. Can they appoint more than one auditor, joint auditors? Yes. What do they say? Rather you appoint your joint auditors in such a manner that all the joint auditors do not complete their term at the same time. You remember that sentence we had seen, that do not appoint the joint auditors in such a manner that you appointed 2 joint auditors and they complete their term at the same time. No, it says appoint one earlier and appoint one later, so that their 5 years do not get over at the same time. And then we said consecutive years shall mean all the preceding years until the break is by 5 years or more. Okay, generally who appoints the auditor of the company? The members, right? They appoint the auditor of the company. But who can recommend, okay, you appoint so and so as the auditor of the company? It says the audit committee or the board of directors, as the case may be. What do they look into for the appointment? When they want to recommend the name of an auditor, what do they look into? The qualification and experience. Then whether the qualification and experience is it commensurate with the size and requirements of the company, and the list of any pending proceedings or orders against the auditor. Then if the company does not have an audit committee, then the board will directly make the recommendation to the members, and the members will appoint the auditor. However, if the company has an audit committee, the audit committee will make the recommendation to the board of directors, and then board may agree or disagree with the recommendation of the audit committee. If it agrees, then that recommendation they pass on to the members, and then the members will appoint the auditor. However, if the board disagrees with the recommendation of the audit committee, it will cite back the case to the audit committee for reconsideration. However, audit committee decides not to reconsider its original recommendation, then the board will record the reasons for the disagreement and send its own recommendation to the members. Will send its own recommendation to the members, and if they agree, then no problem, that recommendation will be sent to the members. Okay, right? Is the recommendation of audit committee, board of directors required even in case of filling the vacancy for the casual vacancy of the auditor? Yes, all appointments of the auditor, including the filling of the casual vacancy, who has to do the recommendation? The recommendation has to be done by the audit committee or the board of the directors. Are you getting this one? Okay, right. So that was regarding the appointment of the company auditor. Then we came to the removal of the company auditor. Removal of the company auditor before the expiry of his term. And right now, in the next 1 hour, you want to remove the auditor of the company. Second one, removal of the auditor at the expiry of his term, but before completion of tenure. That 5-year tenure is not yet over. Third one, the resignation of the company auditor. And the last one is the removal of the auditor by the tribunal or the central government. Now, what is required for removal of the auditor before expiry of his term? One, the prior approval of the central government, and second, what is required is the special resolution in the general meeting, right? The special resolution in the general meeting. At the expiry of his term, a special notice is required to be sent by the members to the company, right? Then the retiring auditor has a right to make the representation in writing. It should not exceed reasonable length. He can request the company to circulate it to the members. Company must circulate unless any default or it was received too late. In that case, it would be read out at the meeting. This is without prejudice to the right to be heard orally at the meeting, right? And instead of using the right, if the retiring auditor is abusing the right, then the company can make an application to the tribunal, and tribunal could say that don't circulate, don't read out this representation, and then after that a special resolution to be passed in the general meeting. Resignation of the company auditor within, where are you all? Do you remember? Did we study all this yesterday? Right? Resignation of the company auditor within 30 days from the date of the resignation. Who needs to file? Auditor needs to file form ADT 3 with the company and with the ROC, and in case of a government company also with the C and AG. Are you getting that? And what if the auditor does not file the ADT 3 with company, ROC or C and AG? Then penalty, which is 50,000, or the remuneration of the auditor, whichever is less, and further penalty of 500 rupees per day for each day of continuing default, subject to a maximum of 2 lakh rupees, right? So that's the resignation of the company auditor, right? So resignation of the company auditor, how many days? Within 30 days. And which form? ADT 3, right? So this 3 and 3, you can remember it together, right? So ADT 3 and the 30 days, right? Then the removal of the auditor by tribunal or CG. So tribunal either suo moto, or that is on its own, or based on an application received from Central government or any person concerned. The tribunal is satisfied. What? That the auditor of the company has acted in a fraudulent manner or has abated or colluded in any fraud by or in relation to the company or its directors or officers, it may order the company to change its auditors. If the application is received from CG, then the tribunal should pass the order within 15 days and the another auditor will now be appointed by the CG, that is the central government. Then such an auditor against whom the final order has been passed by the tribunal cannot do the audit of any company for a period of 5 years and shall be liable under section 447, and the liability shall be of the firm and every partner of the firm, but for criminal liability only the concerned partner will be liable, right? So that was regarding the removal of the company auditor, right? These were the provisions regarding the removal of the company auditor. And then we studied a small section over there, section 142, which is regarding the auditor's remuneration. What is the thumb rule for the remuneration of the auditor? Who will decide the remuneration of the company auditor? The company in the general meeting or in the manner determined therein. So either shareholders can decide the remuneration of the auditor or they can decide who will decide. Right, that they can decide, let the managing director decide, let the board of directors decide, right? So either they decide or they can decide who will decide. Are you understanding that? Right, the remuneration to be paid to the auditor. However, where first auditor is appointed by the where first auditor has been appointed by the board of directors, his remuneration could also be fixed by the board of directors. And remuneration includes any, right, remuneration includes any facility provided to the auditor, but it does not include the other services which are being provided by the auditor, like say some tax audit or so, that is that tax audit fee or so, that is not included in the auditor remuneration. Is it clear to all of you? So who appoints the subsequent auditor in case of government company? Who appoints the subsequent auditor in case of the government company? C and AG within 180 days from the commencement of the financial year. Who decides the remuneration of the government company auditor? Company in general meeting or in the manner determined therein. Yes, because here did you see anywhere have I mentioned CNAG? In section 142, anywhere do you see CNAG mentioned over here? No. So that means though the subsequent auditor in case of the government company is appointed by the C and AG, the remuneration is determined by company in general meeting or in the manner determined therein. Are you able to follow this, everyone? Okay, right? So this is up to where we have already discussed, right? So now coming to section 143, which is regarding the rights and duties of the company auditor, right? So now coming to section 143, which is regarding the rights and also the duties of the company auditor. So now everything decided, okay, who will be appointed as an auditor, how he will be appointed as an auditor, how he could be removed, how the remuneration of the auditor is to be decided. But now next question, okay, now you've appointed auditor, what is this fellow supposed to do? What is this fellow supposed to do? What rights does he have? What duties does he have? Right? So rights and duties of the company auditor. So one, we will look into the rights and then we will look into the duties of the company auditor. Right? So first right of the company auditor is the right to access the books of account. Right? Right to access the BOA. What is BOA? The books of account of the company. Right? Right to access books of account. Because without that, can you do the audit? No, you need to have the access to the books of account of the company. So statutory auditor, I told you, wherever we are talking about audit, which audit are we talking about? Unless otherwise specified, it is always statutory audit. What opinion is expressed by statutory auditor? True and fair view. True and fair view. Do you remember that? We had seen it yesterday. Right? Report on the true and fair view of the state of affairs, the profits, the cash flows of the entity. Right? So right to access books of account. So they say, okay, statutory auditor, come here. These are the books of account of the company. Take these and start doing the audit. So is it okay if you just give him the books of account? No, he is going to ask a lot of questions to the management of the company regarding their accounting policies, accounting entries, accounting estimates and so. Right, so right to obtain the information and the explanation. Right, so next right of the company auditor is the right to obtain the information and the explanation. Right, right to receive, obtain the information and the explanation. Right, next right of the company auditor is the right to report to the members. Right to report to the members of the company. Right, then one more right of the company auditor is right to receive the notice. Right to receive the notice and attend the general meeting. Board meeting, no, general meeting. Right to receive the notice and attend the GM. You understand GM? General meeting of the company. So it could be AGM or it could be the EGM, any general meeting of the company. And last right of the company auditor which we have over here is the right to exercise the auditor's lien, LIEN, and a right of the company auditor to exercise the audit lien. Right, so these are the rights of the company auditor. Right to access books of account, right to obtain the information explanation, right to report to the members, right to receive the notice and attend the general meeting, and right to exercise the audit lien. Right to receive the notice and attend the general meeting is given under section 146. And yesterday we had made a list of the sections. Do you remember that? Right. So right to receive notice and attend the general meeting, that right has been given under section 146. Right. So have you made a list of the rights of the company auditor? Right. What are these? These are the rights of the company auditor. Right to access books of account, right to obtain information explanation, right to report to the members, right to receive notice and attend the general meeting, and right to exercise the audit lien. What is auditor's lien? We'll come to that. Okay, right. Then after the rights of the company auditor, you have the duties of the company auditor. Right, after the rights of the company auditor, now you have the duties of the company auditor. Right, and here we are going to talk about the 8 duties of the company auditor. Are you all with me? Yes. Right to, we've seen the rights of the company auditor. Now coming to the duties of the company auditor. So first duty of the company auditor is the duty as to inquiry. Right, what is this duty as to inquiry? We will see that. That is 143 subsection 1. Right, then next duty of the company auditor is the duty as to reporting, which comes under section 143 subsection 3. Right, then duty to report on additional matters, duty to report on the additional matters, 143.11. Right, 143.11. Next duty to sign the audit report, duty to sign the audit report. This comes under section 145. This comes, duty to sign the audit report comes under section 145. Right, then duty to give the reasons, duty to give the reasons for the qualifications in the audit report. QLF is what? Right, duty to give the reasons for the qualifications in the audit report, AUDIT, and then the report. Right, so that is 143 subsection 4. Duty to give reasons for the qualifications in the audit report, 143 subsection 4. Right, then you have the duty as to branch audit, duty as to the branch audit. What is branch audit? We'll see it shortly. Right, so 143 subsection 8. Right, then next duty of the company auditor, duty to comply with the standards on auditing. Do you remember SA? Yesterday did we discuss accounting standards and auditing standards? Auditing standards are called as the SA, the standards on auditing. So duty to comply with the auditing standards, 143 subsection 9 and 143 subsection 10. Right, and the last duty of the company auditor is the duty to report the fraud to central government, duty to report the fraud to CG, section 143 subsection 12, right? 143 subsection 12, the duty to report the fraud to CG, right? So these are the 8 duties of the company auditor: duty as to inquiry, duty as to reporting, duty to report on additional matters, duty to sign audit report, then duty to give the reasons for qualification in audit report, duty as to the branch audit, then the duty to comply with the standards on auditing, and the duty to report the fraud to the CG, right? These are the duties of the company auditor. So what have we done right now? We have made a list of the rights of the company auditor, and we have made a list of the duties of the company auditor. Anything that you don't understand? Yes? Achha, black color I'm not using only. Red also I'm not using. Okay, right. So anyway, so is this color okay? This is pink color. Okay. This color? Orange color. Okay. Look over here. Pink. That may be to manage the brightness. Okay. Right. So, okay, don't worry. I'll use pink and orange. है ना? So duties of the company auditor: duty as to inquiry, duty as to reporting additional matters, sign audit report, then duty to give reasons, then the branch audit, then duty to comply with the essays, and duty to report the fraud to the central government. Is it clear to all of you? Right. So now first coming to the rights of the company auditor. Are you all there? Section 143, which is regarding the rights and duties of the company auditor. Now first what we are talking about is the rights of the company auditor. But before I come to the rights of the company auditor, let us first quickly finish one small section, section 128 of the Companies Act 2013, which is regarding the books of account, right? Section 128 of the Companies Act 2013, which is regarding the books of account, right? Books of account, right? Yesterday what did we say? That auditor, you need to express an opinion on the financial statements, okay? Whether financial statements give a true and fair view, and these financial statements are prepared on the basis of the books of account of the company, right? So now what do you mean by the books of account? So we have two definitions over here. One, you have the definition of book and paper, or the book or paper, and second definition which we have is the definition of the books of account. All definitions are given under section 2 of the company law, right? So section 2 subsection 12 and section 2 subsection 13 of the Companies Act 2013, wherein you have the definition of book and paper and the books of account. Okay, right. So now what do you mean by the term books of account? Right, so I tell you, okay, see, in this particular box there are the books of account of the company, or in this pen drive there are the books of account of the company. So what is meant by the books of account of the company? It says books of account include all sums of money which have been received and expended by the company. All sums of money which have been received and expended by the company, and matters in respect of which the income and expenditure has taken place. Can you give me one word for that? All sums of money which have been received and expended by the company. Cash book. And items in respect of which the income and expenditure has taken place. So in simple language, I can call this as the cash book. Then the assets and liabilities of the company. The assets and the liabilities of the company, which is nothing but the balance sheet. Are you understanding that? Right. Then the sales purchases of the goods and services by the company. Right, the sales and the purchases of the goods and services by the company, right? So that is your trading account and your profit and loss account, right? So trading and the P&L account, that is the profit and loss account. And if the central government has prescribed, okay, then the details of the material, labor and the other items of the cost, right? So MLO, what is MLO? Material, labor and the other items of the cost. Who will prescribe? that you need to maintain the cost records, the central government will prescribe. Every company, like Infosys, do they have any inventory with them? Infosys? Infosys, do they have any inventory with them? No, but Tata Motors, do they, no, Infosys software company, so do they have any inventory with them? No, but Tata Motors, do they have inventory with them? Yes. So now central government will prescribe, okay, which companies need to include the cost records in their books of account, right? So what is the fourth books of account which you have over there is the cost records. But understand that cash book, balance sheet, then the P&L have to be maintained by all company, but cost records may or may not be required to be maintained by the company. But cost records may or may not be required to be maintained by the company. And then you have the term book and paper or the book or paper. What do you mean by book and paper, book or paper? It says it means the DVDWRM, and it includes the books of account. What is DVDWRM? It is the deeds, vouchers, documents, writings, registers and minutes. It is the deeds, vouchers, documents and the writings, registers and the minutes, right? So before completing with the duties of the company auditor, I have come to the Section 128. What is Section 128? It is regarding the books of account. And what's the Section 212? What do you mean by book and paper or book or paper? One, it includes the books of account, and then it includes the deeds, vouchers and the documents. So that is your DVD, and then the writings, minutes and the registers. So that is the WRM, maintained in paper or in electronic form. Are you understanding this, everyone? What do you mean by book and paper or book or paper? It includes the books of account, DVD, WRM. What is DVD? Deeds, vouchers, documents. WRM, writings, registers and the minutes. Okay. And then as per Section 213 of the Companies Act, books of account include the records maintained in respect of all sums of money received and expended by a company and matters in relation to which the receipts and expenditure take place. So in simple language, this can be called as the cash book. Then all the sales and purchases of goods and services by the company. So that is your trading and profit and loss account. Then the assets and liabilities of the company, that is the balance sheet, and the items of cost as may be prescribed under Section 148 in case of company which belong to any class of company specified under that section. So who will prescribe? The central government. So that is the cost records. Okay, that means the cost records. Are you understanding this, everyone? What do you mean by the books of account? Yes, it means the cash book, trading account, balance sheet and the cost records. Okay, right now what did we study? We studied the books of account of a company. Right, what are the books of account of a company? Right, you have the cash book, then you have the balance sheet, then you have the trading and the profit and loss account, the trading and the profit and loss account, and then you also have the cost records which may be prescribed to be maintained. Okay, right. Later on we'll also study regarding the books of account to be maintained by an LLP. Right, then we will also study the books of account to be maintained by a cooperative society and also by a multi-state cooperative society. You understand MSCS? What is MSCS? It is the multi-state cooperative society. It is the multi-state cooperative society, right? So we talk about the books of account of a company, we talk about the books of account to be maintained by an LLP, and also the books of account to be maintained by a cooperative society or a multi-state cooperative society. Right, the books of account to be maintained by a cooperative society and a multi-state cooperative society. Okay, right, so just so that we take this as an opportunity, you know, to go around the book. Like if I come to the chapter of the cooperative societies, right, if I come to the chapter of the cooperative societies, right, here cooperative societies, do you have the books of account of the cooperative society? Do we have the books of account of the cooperative society over here? Yes, what does it say? All sums of money received and expended. That means cash book. I will write and keep it over here so that when we come over here later on, you'll remember if ma'am has written, that means we visited over here. Right? Then the sales and purchases of the goods by the society. Acha, where there what it was written? company, है ना? All sums of money received and expended by the company. Here what is written is all sums of money received and expended by the society. All sales and purchases of goods by the society. So that is your trading account. And then the assets and liabilities of the society, right? So that is the balance sheet, right? This is in case of the cooperative society. Then after cooperative society, we also have the multi-state cooperative society. Now for multi-state cooperative society, MSCS, what are the books of account? All sums of money received and expended. Are you getting that? Right? And the matters in respect of which the receipt and expenditure take place. Then the sale and purchases of the goods, the assets and the liabilities. And in case if the MSCS is engaged in the PPM, what is PPM? Production, processing or the manufacturing. Then particulars relating to the MLO. What is MLO? Material, labor or the other items of cost as may be specified in the bylaws of such society. Are you getting that? Sums of money received and expended, sales and purchases and the assets and liabilities. Okay. And then later on we also have the LLP audit. Right. So if I come to the chapter of the audit of the different types of the entities. Right. The audit of the different types of the entities. Yes, government audit, and then after the government audit, we have the audit of the different types of the entities, in which we also have the LLP audit, right? So we have the LLP audit. Right, so this is partnership firm, and then after the partnership firm, we have the LLP audit. Again, look at the books of account to be maintained by LLP. All sums of money received and expended by the LLP. First it said company, then it said society. Now it is saying LLP. And the matters in respect of which the receipt and expenditure take place. Then the record of the assets and liabilities of the LLP. Then the statement of the cost of goods purchased, inventory, work in progress, finished goods and the cost of goods sold. And any other particulars which the partners, because LLP is going to have the partners. So any other particulars which the partners may decide. Right, so are you seeing everywhere? At 4 places did I show you books of account? Books of account of a company, books of account of an LLP, books of account of the cooperative society, and books of account of the multi-state cooperative society, right? So we can just prepare a summary chart over here, right? So we have something called as the books of account of a company, books of account of an LLP, books of account of a cooperative society, and books of account of a multi-state cooperative society. Right, now books of account of a company, what does it say? Cash book. Right, you have the cash book, then the trading account, right, or the balance sheet. Right, then after that you have the balance sheet, and if prescribed by the central government, then also the cost records. Then LLP, again it has the cash book, right? It has the cash book. Then the assets and liabilities of the LLP, right? So what does it have? It has the cash book. Then after the cash book, it also has the balance sheet. Then they also talk about the statement of cost of goods purchased, right? Statement of the COGS. Do you know COGS? Cost of goods purchased, cost of goods sold, right? Cost of the goods, and any other particulars as the partners may decide. Any other particulars as the partners may decide. Right. Then in case of cooperative society, again they talk about the cash book, right? Then after that the trading account, right? Then after that you have the trading account, then the balance sheet, right? Then the balance sheet, and then the cost records if they are required as per the bylaws of the cooperative society, right? And again for multi-state cooperative society, you have the cash book, right? The trading account, then the balance sheet, right? Then the balance sheet. And if it is engaged in PPM, you remember PPM, production, processing and the manufacturing, then the particulars of the MLO, material, labor and the other items of cost. So that is nothing but your cost records. That's nothing but the cost records, right? So what is this? These are the books of account, right? What are these? These are the books of account which are required to be maintained, right? Books of account. Right, which section in company law it is given in? Section 2, subsection 13, and as such we have section 128 of the Companies Act, which is regarding the books of account. Right, we have section 128 of the Companies Act, which is regarding the books of account. Okay, so now do you know what is meant by books of account? What? Cash book, trading account, balance sheet, and the cost records. Now, do you have any suggestion regarding where these books of account of the company should be maintained? Books of account to there, but now company, Infosys, where should they keep their books of account? Cloud, okay. Now cloud is so there in the heaven, okay. So then there is no location, but yes. But by default, say it is the physical books of account. A company could be having the electronic books of account also. But say if they have their physical books of account, where should the physical books of account of the company be kept? At the registered office of the company, right? So what is the place of maintenance of the books of account? What is the place of maintenance of the books of account? Say the place of maintenance of the books of account is the registered office of the company. So by default, where should a company maintain its books of account? By default, where should a company maintain its books of account? A company should maintain its books of account at the registered office, right? So what is the place of maintenance of the books of account? Right, the book should be maintained at the registered office of the company. Right, this so place of maintenance of books of account. So what are we discussing over here? Section 128. Yes, have you written this one? PPM is production, processing, manufacturing. When you go to multi-state cooperative society, you will find it over there. Okay. How many of you opened the audit book yesterday after going home? How many of you? Some of them, they don't listen only, such type of question. Right? Did you open the audit book? Any notes or anything, right? Did you anything related to audit? Did you look into? Or like you shut the book over here and then next day morning directly open the book over here? No. Okay. Right. So that's regarding the books of account, the different definitions over there. Right. So section 128, one we studied what over there is the definition under section 213 of the BOA. What do you mean by BOA? The books of account. Okay, right. Then we studied regarding the place of maintenance of the books of account. Right, so by default, where should a company maintain its books of account? The company should maintain its books of account at their registered office. Okay, but say example, Growth Limited. Right, say example, Growth Limited is having its registered office in Gandhinagar, Gujarat. Right, say they are having their registered office in Gandhinagar, Gujarat. So by default, where should they maintain their books of account? In Gandhinagar, Gujarat. But say this Growth Limited is having their corporate office. They are having their corporate office in Mumbai, Maharashtra. Right? They are having their corporate office in Mumbai, and that is why they now want to maintain the books of the company not at the registered office, but they want to maintain the books at the corporate office. Right? So now by default you can maintain your books at the registered office, but now you want to maintain your books of account at a place other than the registered office. So what does the company law say? Section 128, that board of directors, you need to pass a board resolution regarding the new address where you want to maintain the books of account of the company, and within 7 days of passing of the board resolution, the new address is to be intimated to ROC. Right, so by default, where you need to maintain the books of account of the company? Registered office. But if you want to keep the books of the company at any other place, right, any other place, then what does it say? A board resolution needs to be, right, a board resolution needs to be passed, right? A board resolution needs to be passed, and then within 7 days of the passing of the board resolution, the new address is to be intimated, the full address is to be intimated to the ROC. Right, the full address is to be intimated to ROC, right? So if you want to keep the books at any other place, then board a resolution, and within 7 days, the full address is to be intimated to the ROC. Okay. Now, can a company have a branch? Right, can a company have a branch? Okay, so like say in case of this Growth Limited, right, they have their registered office in Gujarat, in Gandhinagar, right? Growth Limited, they are having their registered office in the Gandhinagar, Gujarat. Okay, however, they are having their corporate office in Mumbai. So that is why board of directors passed a board resolution that books of the company will be maintained at Mumbai, and then the new address has been intimated to the ROC within 7 days of passing of the board resolution. But now say Growth Limited also has a branch office. Growth Limited also has a branch office, say in Hyderabad. Right, say Growth Limited also has a branch office in Hyderabad. Now obviously branch will maintain the books where? At the branch office. But as per section 128, where can you maintain your books of account? Registered office or the place which has been decided by the board. And a registered office by default, or the place which has been decided by the board. But now branch is going to maintain the books of account at the branch office. Then how branch will comply with the requirement of place of maintenance of books of account? Because branch will maintain books of account at the branch office, and we say that books of account should be kept at the registered office or the place decided by the board. So how will branch comply with the requirement of the place of maintenance of the books of account? Yes, it says periodic. Summarized returns are to be sent periodically by the branch office to the registered office or to the place which has been decided by the board. Then it will be considered that the branch has also complied with the requirement of the place of maintenance of the books of account, right? So regarding the branch books of account, what does it say? Branch books of account, summarized returns. For branch books of account, what does it say? Summarized returns are to be sent periodically at least once in 3 months, and periodically to registered office or to the place which has been decided by the board, right? So branch books of account, how they will comply with the requirement of place of maintenance of books of account? Summarized returns to be sent periodically to the registered office or to the place decided by the board. Are you understanding this, everyone? Yes, so place of maintenance of books of account and then the branch books of account. Okay, right. What do you mean by books of account? Cash book, trading account, balance sheet and the cost records. Okay, now when would you say that these are proper books of account? What is books of account we discussed, but now you are saying these are not only books of account, they are proper books of account which have been maintained by the company. Right, so one, yes? Okay. Yes. Right, so one, if they give a true and fair view. Second, if they are kept under the double entry system of the accounting. So company law, does it allow single entry system? No, double entry system of the accounting. And third one, they have to be kept on the accrual basis of the accounting, mercantile basis, cash basis. Is it allowed under company law? You are a company. Can you maintain your books of account on cash basis? No. Can you maintain your books of account on single entry basis? No. Right? Then your books of account will not be considered to be the proper books of account. And when are your books of account considered to be proper books of account? If they give a true and fair view, they are kept as per the double entry system of accounting and also as per the accrual basis of the accounting. Are you understanding this, everyone? Okay, right. Then we talk about also the, what do you say, the period. How many years should a company maintain the books of account? Period of maintenance? Right, period of maintenance. Say you set up a, yes, period of maintenance of books of account. Yes, company. Say your company is in existence for last 50 years. So last 50 years books of account you will maintain? 5 years? 7? 15, what, auction or what? 8, 10, finish till the dissolution of the company. So if any company 125-year legacy, 125-year ka books of account you will keep. Lucky number. As you're learning audit now. Okay. Yes? Now, they have a wonderful way of drafting law. What do they say? If the company is in existence, if the company is in existence for less than 8 years, then you have to maintain the books for all the years. If the company is in existence for more than 8 years, then you need to maintain the books for 8 years, right? Last 8 years in good condition, not in rat-eaten condition. You understand that? Okay, right? So 8 years, right? So by default, what is the crux of the story? That for how long is the company required to maintain books of account? 8 years. And say if the central government has ordered an investigation of the company, if the central government has ordered an investigation of the company, then for such longer period as the central government may deem fit, such longer period as the central government may deem fit. So actually very simple now. Okay, for what is the period of maintenance of books of account? 8 years. But how they make a story out of it? Okay, your company is in existence for less than 8 years. Then obviously you have to maintain the books for all the years. My company is in existence, say, since last 4 years. Then I have to maintain the books for all the 4 years. Company is in existence for more than 8 years. Then you need to maintain your books of account for 8 years. And say central government has ordered an investigation. Then for such longer period as the central government may deem fit. Right? Such longer period as the central government may deem fit. That is the place of maintenance, the period of maintenance of the books of account, right? The period of maintenance of the books of account, right? So more crux is what? The books of account have to be maintained for 8 years. Okay. Right, so what do we say? They should be giving the true and fair view, double entry system of accounting and the accrual basis of the accounting. What is the place of maintenance of books of account? Registered office or the place which has been decided by the board. But within 7 days, the full address is to be intimated to the ROC. And then branch books of account, it says branch will keep the books at the branch, but summarized returns are to be sent periodically to the registered office or to the place which has been decided by the board, right? Or to the place which has been decided by the board. Okay, right. So anyways, now let us come to the rights of the company auditor, right? So we just discussed section 128, which is regarding the books of account, and now let us come to the rights of the company auditor. What are the 5 rights which you have mentioned over there? Right to access books of account, right to obtain the information and explanation, then right to report to the members, then right to receive notice and attend the general meeting, and right to exercise the audit lien. Okay, right. So what does it say? The auditor of the company, right? The right to access the books of account is the right given to the auditor of the company without any restriction, exception or qualification. It is an unrestricted right given to the auditor of the company without any restriction, exception or qualification. Right to access the books of account. Okay, what do you mean by books of account? Cash book, trading account, balance sheet and the cost records. So when I go for the audit, I am telling client that client, whatever meetings took place during the year of your board of directors and shareholders, kindly provide me with the minutes of the meeting. I want to check your salary expenditure. So please provide me the attendance register of your employees, right? Please provide me with the attendance register, because based on the attendance, accordingly the salary needs to be calculated. Say I want to check the purchases and sales. So I tell the client, please give me the production records of the company. Please give me access to the production records of the company. They say, auditor, we cannot provide you all this data. data. Because what do you mean by books of account is only cash book, trading account, balance sheet and the cost records. They say, why you are asking for all this other information? Right, like minutes of the meeting, attendance register, production records of the company and so. Right, so during the course of audit, can the auditor ask for such documents also? Such records and documents also? Yes, it says any record or document, any record or document which is having a bearing or which is likely to have a bearing on the accounts of the company. Right, so all vouchers, do you understand the term voucher? Voucher means supporting. On what basis? You say in the books of account, accounting entries are passed. On what basis is this accounting entry passed in the books of account? There has to be a voucher. And sometimes you say, oh, the quality of this product is so good, I vouch for it. I vouch for it means you support it. You understand? So the accounting entry, whatever is the supporting document to the accounting entry, that is called as the voucher. You understand? So every document, auditor asks, how have you recorded this rent expenditure? How these traveling expenses have been recorded? How this advertisement expenditure has been recorded? How this other income of the company has been recorded? So any income, any expenditure, can the auditor ask for the supporting documents? Yes, even that is included in the books of account. Okay. Does the auditor also have access to the books of account of the company maintained at the branch? Yes, the auditor also has the access to the books of account of the company which are maintained at the branch. Can he also access the branch books of account? Yes, the auditor, you can also access the books of account of the branch. Like, see, understand, there is a head office of the company and there could be a lot of branch offices of the company. I think the best way to understand head office and branch office is going to be the banks. Because bank has a head office and it has thousands and thousands of the branch offices over there. Okay, now it may so happen that the head office is audited by PwC and the branches are also audited by PwC. So in that case, the head office auditor and the branch office auditor are the same. But it generally also so happens that the head office is being audited by PwC, but the branches are being audited by EY or ABC and Company, Chartered Accountant, some another CA firm. Right, so in that case, PwC is going to be the principal auditor. Right, they are called as the principal auditor or also referred to as the company auditor because they are the head office auditor. Whereas EY is referred to as the component auditor. What is component? It is the branch. Right, it is the component, the branch auditor, or yes, component auditor, or it could also be referred to as the branch auditor. Right, the component auditor or the branch auditor. Are you understanding that? So head office is being audited by PwC. Say the branch offices are being audited by EY. Yes, the branch offices are being audited by EY. Now give me an careful answer over here. Okay. Yes, branch auditor. Who is branch auditor in my example? EY. Will they have access to the books of account of the company maintained at the branch? EY. Will they have access to the books of account of the company being maintained at the branch? Yes. And now PwC, they are the head office auditor. Will they have access to the books of account of the company maintained at the head office? Yes. Will they also have access to the books of account of the company maintained at the branch? Yes, even though if they are being audited by the branch auditor, yes, even though if required, the company auditor thinks, oh no, I think I need to access the books of account of the company maintained at the branch. Even though if they are being audited by the branch auditor, another auditor, the component auditor, still the company auditor has the right to access the books of account of the company maintained at the branch. Are you understanding this, everyone? Okay. Then say you are the auditor who is doing the audit of the consolidated financial statements. You understand consolidated? Holding company, subsidiary, associate, joint venture, all put together. And you are doing the audit of the consolidated financial statements. Now, consolidated means what? Holding company, that is the parent company, plus the subsidiary, plus the associate plus the joint venture. So auditor of the consolidated financial statements, will he also have access to the books of account of the subsidiary company? Yes, will he also have access to the books of account of the associate and joint venture? Yes. He will also have access to the books of account of the subsidiary, associate, joint venture when he is doing the audit of the consolidated financial statements. Are you able to follow this, everyone? The right to access the books of account. The auditor of the company at all times. So 3 o'clock in the morning, 3 o'clock in the evening, right, afternoon, midnight, any time. What does it say? Shall have right of access to the books of account and the vouchers of the company. So not only books of account but the supporting to the books of account, whether kept at the registered office of the company or at any other place. You know any other place? Any other place, the board of directors will pass a board resolution, and within 7 days they will intimate the address to the ROC. So that is why we first completed section 128 and then we came over here, right? So registered office or at any other place. Then the phrase books, accounts and vouchers include all books which have a bearing or which are likely to have a bearing on the accounts, which whether these are the usual financial books or the statutory or the statistical books or the memoranda books. Right, so list of attendance, what you say, list of products of the company, that's a memoranda book, just a list is being maintained. Or any statistical book, any statutory book, register of or contract, register of charges, that book is being maintained by the company. Does the auditor have access to all books? Yes, the auditor has access to all books. Then what does it say? Similarly, the term voucher includes all or any of the correspondence which may in his way serve to vouch for the accuracy of the accounts. Thus, right of access is not restricted to books of account alone, but it is for the auditor to determine what record or document is necessary for the purpose of the audit, right? So which record or document. And the right of access also extends to the branch records if the auditor considers it necessary to have access there too. And the auditor of the holding company will also have the right of access to the records of the subsidiaries and associate companies so far as it relates to the consolidation of its financial statements. Are you understanding this? The right of the company auditor, the right to access the books of account. Right, one more thing which I would like to tell you over here. Okay, there are two ways in which ICAI could be asking you the question. Right, so one style of asking the question which is less observed is the wholesale question. Right, wholesale means what are the rights of the company auditor, and then each right of the company auditor you write down and you write 1122 lines in front of it. Easy to fill the page, right? You know the rights of the company auditor, and each right you write 1 or 2 lines in front of it, and then your work is done. Okay, another style of them asking the question is the retail style. And now briefly explain the right of the company auditor with respect to access books of account. So now regarding the first right of the company auditor itself, you have to write down a 3/4 page story or something like that. Some 5-6 points you need to write over there. Are you understanding? These questions are relatively easy, wholesale questions, but retail questions relatively you need to have a better preparation and mastery of that particular heading and that particular topic. So whenever you study any question, you need to see, okay, if it is asked at wholesale level, what points I need to write. Then if it is asked at retail level, then what points are required to be written. And do you know, coincidentally, it is rhyming. What is rhyming? If the question is asked in retail, you need to know the points in detail. See, I told you it is rhyming. Now I come to know that you've come to the class. Okay, right. So, yes, that is regarding the right to access the books of account. Then they say, auditor, take all the books of account, all the records, all the vouchers, all the documents of the company, sit in one corner and you do the audit. Will auditor ever sit in one corner? No, he'll roam around the entire client premises, meeting inventory manager, marketing manager, sales manager, finance manager, accounts, R&D department, factory manager. He'll keep on roaming around the entire company. And everybody, you always see the auditor, every time he's having discussions with different people in the organization. And he's talking to the different people in the organization and he's obtaining the information and explanation. And then they say, auditor, how much question you are asking? Oh my God. So now what you say? No, oh my God. How many questions can the auditor ask? As he may think is necessary for the performance of his duties as an auditor. Right? So how much question, information, explanation he can ask as he may think is necessary for the performance of his duties as an auditor. Rather, yesterday when we saw the Reliance Industries report, right, yesterday when we saw the Reliance Industries report, look at this paragraph over here. What does it say? In our opinion, right? In our opinion and to the best of our information and according to the explanations given to us. Right? In our opinion and to the best of our information and according to the explanations given to us. Right? In our opinion and to the best of our information and according to the explanations given to us. Right? So what is one more right of the company auditor? Is the right to obtain the information and the explanation. One more right of the company auditor is the right to obtain the information and the explanation. Okay. Right. Then next right of the company auditor is the right to report to the members. Next right of the company auditor is the right to report to the members. Rather, this one I will say it's not only a right but it is also a duty, because you cannot say, oh, I don't want to report this year. You always have to report to the members. And what you need to report to the members on? Yes, two points over there. 143 subsection 2. Right to report to the members. Very important one. Right to report to the members. And what he needs to report to the members? One, whether the financial statements give the information required by the act in the manner so required. And second, whether the financial statements give a true and fair view. So two gives over there. Whether the financial statements give the information required by the act in the manner so required. And second, whether the financial statements give a true and fair view. Right to report to the members on the accounts examined by him. What he needs to report to the members? That whether the financial statements give the information required by the Companies Act 2013 in the manner so required. And second, whether they give a true and fair view of the state of affairs, results, cash flows, changes in equity for the year ended on that date. Right to report to the members on the accounts examined by him. What he needs to report to the members? That one, whether the financial statements give the information required by the act, and second, whether they give a true and fair view. Right? So here you have the two give points over there. What are the 2 points? One, whether they give the information required by the act, and second, whether they give a true and fair view. Right? So give the information required by the act and also whether they give the true and fair view. Okay. Right, so that is the right to report to the members on the accounts which have been examined by him. The report after taking into account the provisions of the Act, the accounting and the auditing standards. Do you know accounting standards and auditing standards? Yes. Yes, accounting standards and auditing standards. Do you know both of them? AS and SA? Accounting standards and the standards on auditing, matters which are required to be included in the audit report under the provisions of the Act or any rules made there under, and to the best of our information and knowledge, the said accounts give the true and fair view of the state of the company's affairs, its profit and loss and the cash flows and such other matters as may be prescribed. Right, so that is the right to report to the members. Okay, then after the right to report to the members, you have the right to receive the notice and attend the general meeting. Right, so right to receive the notice and attend the general meeting of the company. Right, so what does it say? All notices, whether it is AGM or EGM, all notices should be sent to the auditor of the company. All notices of the general meeting should be sent to the auditor of the company. And then what does it say? Does the auditor need to attend the general meeting of the company? Yes, unless exempted by the company. So who can exempt the auditor, where the company is only not required to hold a general meeting or so? So unless exempted by the company, right? So unless exempted by the company, attend the general meeting of the company either by himself, that is the auditor himself should attend the general meeting, or he can attend the general meeting through his AR. Who is his AR? The authorized representative. He can attend the general meeting either by himself or through his AR, right? So then first year article started daydreaming. What he started daydreaming? Okay, oh, if my boss doesn't go attend himself, then he can send me an authorized representative to attend the general meeting of the company. No, but what does it say? Can the first year article go for attending the general meeting? No. Who can go to attend the general meeting on behalf of the auditor of the company? Any other person who is also qualified to act as an auditor. Right? So another partner of your firm, another chartered accountant in your firm, he may go for attending the general meeting. So what does it say? All notices and other communication relating to any general meeting shall be forwarded to the auditor of the company, and the auditor shall, unless otherwise exempted by the company. So unless and otherwise the company is exempted, attend either by himself or through his AR, authorized representative, who shall also be qualified to be an auditor, any general meeting, and will have right to be heard at the meeting on any part of the business which concerns him as the auditor. So now say auditor is attending the general meeting, and in the general meeting the shareholders, they are discussing whether they should amalgamate or merge with another company or no. Yes, whether they should amalgamate or no. That is what is being discussed at the meeting of the shareholders. Can the auditor participate in this discussion? They are deciding, shareholders, that whether we should acquire a new business, whether we should expand our operations, or whether we should amalgamate with another company. Can the auditor participate in this part of the discussion? No. Right? Those are the business decisions of the company. But say they are discussing the financial statements, they are discussing the audit report. Then can the auditor participate in this discussion? Yes. Any part of the business which concerns him as an auditor. Right? So in the meeting, in which part of the discussion he has a right to be heard? In any part of the business which concerns him as an auditor. Are you understanding that? So all notices should be served to the auditor. Then unless exempted by the company, the auditor should attend either by himself or through his authorized representative, any general meeting. It's by a person who's also, AR should also be qualified to be an auditor. And what do we say? Right to be heard at the meeting only on that part of the business which concerns him as an auditor, right? So that's the right to receive the notice and attend the general meeting, right? So that's the fourth right of the company auditor. Now coming to the last right of the company auditor, which is a 100% theoretical concept, but somehow it is so far there in your study material, so we continue to discuss it. Right, so now you've done your audit. Do you need to get your fee for that? You've done the audit, should you get the fee for that? Yes, and now client is not paying the fee. Right, so it is the audit is already done. You thought they are good people, they will say it, auditor, right now no money, we'll pay you later. So auditor signed the audit report, and then later on now they are not paying the fees, and a non-payment of the fees. Okay, right, say you have, some person has given money to another person, one person has given a loan to another person, and that other person is not repaying the loan. Then what you can do? Go and pick up some, gold or something from some particular products of theirs. You can keep it in your custody. You understand? Till the time that person does not repay, or you sell off that gold and you liquidate it and you recover your money. Okay. Now the auditor, his audit fees are not being paid. The auditor, the audit fees are not being paid. Now the auditor has been given the books of account of the company for the purpose of the audit. Right? The auditor has been given the books of account of the company for the purpose of the audit. Now what does it say? Auditor, you can exercise lien, that is you can keep the books of account of the company in your custody till the time your fees are not paid. Right? That is the concept of the audit lien. Right? Auditor's lien, that is you're keeping somebody else's property in your custody. Why? Due to the non-payment of the fees. See, they gave you the books of account for doing the audit. So after you finish doing the audit, you should return the books of account to them. But now what happened? They are not paying your audit fee. That is why what you do, you keep the books of account in your custody. Not sell the books of account, but keep it under your control. So the client will require the books of account. So for that purpose, whenever they require, auditor says, first you pay my audit fee and only then I will return your books of account. Yeah, exactly. With electronic books of account, it is impossible to exercise audit lien. So did you listen to my opening remark when I started with audit lien? It's a completely outdated concept, and rather ICAI, the Ethical Standard Board of the ICAI, ESB, the Ethical Standard Board ESB, the Ethical Standard Board of the ICAI has said that the auditor cannot exercise audit lien due to non-payment of fees. It says even though if there is non-payment of fees, you cannot exercise the audit lien. That is what has been clarified by the Ethical Standard Board of ICAI. But it is there now, so we'll have to study. You know, the audit lien over there. Okay, right. Then again, very practically impossible to exercise audit lien when the client is maintaining electronic books of account. You're saying, I'm taking your books of account. They say, take, we have a backup. Doesn't matter to us at all. And now, one more legal impracticability, you know, for exercising the right of lien. What did I just teach you? Okay, what is the place of maintenance of books of account? Registered office or the other place which has been decided by the board. Now, if auditor wants to exercise audit lien, that means he is going to take the books of account of the company to the auditor office. If auditor is going to exercise the audit lien, that means he is going to take the books of account of the company to the auditor office. So if auditor wants to exercise audit lien, first the board of directors need to pass a board resolution. Okay, now the books of the company will be maintained at the auditor office. Then the auditor office address is to be intimated to the ROC within 7 days of the passing of the board resolution, and then auditor you can exercise the lien. Now you say, ma'am, why board of directors will pass the resolution only? But then that is how it is. You understand that? Right? That is the legal requirement. That is the legal requirement. So best way, rather to fall into this trouble, what is the best way? That you recover your audit fees on the progressive basis. As and when the work is getting completed, you exercise, you recover your audit fees. Are you understanding that? Okay, right. But anyways, what do they say? In terms of general principles of law. So do you understand? This is not any section of company law. But if you see in your study materials, you will see this right of lien over there. Okay, so in terms of the general principle of law, any person having the lawful possession of somebody else's property on which he has worked may retain the property for the non-payment of his dues on account of the work done on the property. On this premise, this auditor can exercise lien on the books and documents placed as his possession by the client for the non-payment of fees for the work done on the books and documents. And it says, you know, there is a correct incorrect which has been asked by ICAI. Okay, auditor's lien is unconditional. So you say incorrect. There are certain conditions associated with audit lien. And who has given these conditions? The Institute of Chartered Accountant in England and Wales, the ICAEW. Right, so that is a question asked in your exams, that auditor's lien is unconditional. You say incorrect. There are some conditions associated with the audit lien, right? So what are the conditions which are there for the audit lien? One, the books must belong to the client who owes you the money. So who owes you the money? Growth Limited. What you did? You went and brought the books of DK Limited. No. The books must belong to the client who owes you the money. Are you understanding that? Second, the book should not have come to the possession of the auditor through any illegal or irregular means. So you cannot keep the client at gunpoint. You understand? And you say, we are taking your books of account over there. No, they should have not come to the possession of the auditor through any illegal or irregular means. That night 3 o'clock, you went over there to the client company and there you went and just took out all the books of account. No, not through any illegal or irregular means. Then, honestly tell me, honestly tell me, okay, how much of your audit fee is pending? How much of your audit fee is pending? This auditor says 5 rupiya 12 ana. You understand? Now 5 rupees audit fee is pending. But this fellow is very meticulous. He says, why? Don't underestimate the value of any money. 1 rupee also. How I lost it? How I am not recovering? No, 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 no. So he says, no. And I have to recover the 5 rupees also from the client. So then he goes to client premises. Tell client, pass board resolution. I will take the books of account of the company to auditor office. Those say, this auditor, who will break head against him? Okay, they pass board resolution. Then auditor hires one tempo. In that tempo, last 8 years books of the company, he puts in the tempo and takes to auditor office. Client is so happy. Is client happy? For 5 rupees, somebody is maintaining your books of account. They say, keep it, no problem. If anybody comes, we'll say the books have been kept at the auditor office address. Right. So what does it say? Retain only the documents as on the work which has been done on them, and retain which are outstanding depending on the fees which has not been paid. Right, so how much of your fee has not been paid? 5 rupees. And how much lien are you exercising? No, it says there has to be some proportion. Some work should have been done on those, and there has to be a proportion regarding how much lien you are exercising and how much fee is outstanding. Right, so that is regarding the right to exercise the audit lien. Are you understanding that? Right to exercise the audit lien. And then here they mention about the section 128. Okay, because where are the books of account of the company to be kept? At the registered office. Right, and if auditor wants to exercise the audit lien, then the board needs to pass a board resolution. So what does it say? Taking an overall view of the matter, it seems that though legally auditor may exercise right of lien in case of company, it is mostly impracticable for legal and practical constraints. His work, and now, yes, when I do the audit, right, I do audit of the books of account. These books of account belong to the client. And when I am doing the audit, I prepare my audit file. Right? Each and every paper in my audit file is called as the working paper. Right? This is also referred to as the audit documentation. This is the audit file, the audit documentation, the working paper. Are you understanding? Now, I have done the audit of the books of account and I have prepared the audit file. What is there in the audit file? The working paper. And now the client is not paying the audit fee. Now the client is not paying the audit fee. Do you think, can auditor exercise lien on the books of account of the client? Can he exercise? That's what, due to non-payment of fee. That is what we are studying. No, you can exercise lien, but it is conditional. Do you think auditor can exercise lien on his working papers? Somebody is not paying me the money. So that is why I say I keep my assets only under my custody. Does that make any sense? You understand? No, if somebody is not paying you the money, their property you need to keep it under your custody. Your property, what you are keeping under your custody for? You understand that? So if client is not paying the audit fee, can you exercise audit lien on the books of account? Yes, but can you exercise audit lien on your working paper? No, working paper is the property of the auditor only. So there is no question of exercising lien. They'll say, what a stupid person, exercising lien on own property only. Okay, client is saying we are not paying fee. Okay, auditor says I keep my working papers in my custody. What is this? They're anyways yours only. So there is no question of exercising lien on the working paper. So what does it say? As per SA 230. What is SA 230? Audit documentation. What is the name of SA 230? Audit documentation. And SQC1, that is standard on quality control issued by the ICAI, provides that unless otherwise specified by law regulation, audit documentation is the property of the auditor. So there is no question of exercising lien on the audit documentation. There is no question of exercising lien. His working papers being his own property, the question on lien on them does not arise. Working papers being the property of the auditor, there is no question of exercising the lien on the working papers of the auditor, right? So everybody, have you understood the rights and duties of the company auditor? Right to access books of account, right to obtain information explanation, right to report to the members, right to receive notice and attend the general meeting, and right to exercise the audit lien. Right. So now coming to the duties of the company auditor. Right. Now first duty of the company auditor is the duty as to inquiry, wherein we have the 6 points of the inquiry. Then you have the duty as to reporting, in which you have the 10 points of the reporting. Then duty to report on additional matters. Who has issued these additional matters? Central government, by issuing the CARO. Do you remember yesterday I told you about CARO? Companies Auditors Report Order 2020. Right? Companies Auditors Report Order 2020. Right. So duty as to inquiry. Right. What is the main bread and butter of the auditor? What is the main bread and butter of the auditor? Yes, what is the main right duty of the auditor? To express an opinion on the true and fair view. This is your main bread and butter. This is your primary objective. This is your main objective of the audit. What is your objective of the audit? To express an opinion on whether the financial statements give a true and fair view. So this is the main task of the auditor. Are you understanding that? But in addition to this main task under 143(2), it says you being the statutory auditor of the company, we want you to make an inquiry of the following 6 points, and we need you to report on the additional 10 points. Right? So 143(1) is the duty as to inquiry, means you need to ask about these matters, and 143(3) is the duty as to reporting. Duty as to the reporting, right? In duty as to inquiry, you have 6 points of inquiry, and duty as to reporting, you have the 10 points of the reporting, right? So we are at a very important discussion right now. You can mark it as a 5-star, right? 143(1) and 143(3). Now, what is the difference between, listen to me everyone, what is the difference between 143(1) and 143(3)? 143(1), you will inquire regarding these 6 points. What are the 6 points? I will tell you. But we will make an inquiry regarding these 6 points. If we don't find anything, I made an inquiry regarding those 6 points, I did not have any observation, I did not find anything wrong over there, then what does it say? No reporting is required to be done. So when reporting is required to be done? Only when there is an adverse finding, only when there is a negative finding. Right, what does that mean? Okay, if I am reading an audit report of a company, right, if I am, please listen to me carefully, if I am reading an audit report of the company, what is the title of the audit report? Independent Auditor's Report. And I see, okay, in this audit report, they have given that the financial statements, auditor has expressed opinion that they give a true and fair view. Then also they have done the reporting on the matters of 143(3). But I see nowhere in the report 143(1) mentioned. Then what does that mean? Okay, auditor has done the inquiry, but the auditor has no negative findings. He has no adverse findings. Because on the matters of inquiry, you need to mention about them in your audit report only if you have an adverse finding. But 143(3), whether you have an adverse finding or you don't have an adverse finding, you always need to report. You understand the difference, 143.1 and 143.3? Right, so if you don't, like, do you know about the fundamental accounting assumptions? AS1, in AS1, going concern, consistency and accrual. You know these fundamental accounting assumptions, going concern, consistency and the accrual. What does AS1? What is AS1 regarding disclosure of accounting policies? What does it say? If these accounting assumptions are followed, then no disclosure is required. However, if they are not followed, then a specific disclosure is required. You understand? So if these accounting assumptions, going concern, consistency, accrual, if they are followed, no disclosure is required. However, if they are not followed, then a disclosure is required. So something same is there in 143.1. What does it say? If there is no finding, no reporting. If there is an adverse finding, then you do the reporting. Simple. If there is no finding, no reporting. If there is an adverse finding, only in that case you do the reporting, right? So now we talk about the the 6 points of inquiry. Duty of the auditor to inquire on the certain matters. Okay, so now coming to 143.1, duty as to inquiry. What is the main duty of the auditor? To report on the true and fair view. Now we are talking about 6 additional points of the inquiry over there. Okay, right. What is the point A? Whether the loans and advances made by the company, whether they are properly secured. Whether the loans and advances made by the company, are they properly secured, and the terms, whether they are prejudicial to the interest of the company, whether they are prejudicial to the interest of the company or the members. Right, what does it mean? Okay, company has given a loan of 10 lakh, example. Now generally think, okay, if you give a loan of 10 lakh to somebody, how much security will you take from that person? At least 10 lakh, but generally we keep a margin also. So you might take a security of 12 lakh or 15 lakh or something like that. Then can we say that the loan is properly secured? Yes, but what you've done, you've given a loan of 10 lakh, you've taken a security of 1,000. Is it properly secured? No, it is not properly secured. Now, generally if you give a 10 lakh loan, what should be the rate of interest? 10%, 12%, 8%, that should be the rate of interest. Right, say generally it is repayable, say in 5 years. These are the terms of the loan. Okay, you know that the rate of interest is 10%, it is to be repaid in 5 years. But now what you've done, you've given a loan of 10 lakh and you say rate of interest is 0.01%. What is the period of repayment? 100 years. You understand? Is this harmful to the interest of the company? Is this detrimental to the interest of the company? That means what? It is prejudicial to the interest of the company. What is prejudicial? Harmful. Right? So whether the terms and conditions, are they prejudicial to the interest of the company or its members? Are you understanding that? Whether the terms and conditions, are they prejudicial, right? Whether loans and advances, are they properly secured, and the terms, are they prejudicial? Prejudicial means they are harmful to the interest of the company or its members. Are you understanding that? Okay. Now, let me explain you one more term over here, because, you know, say, as we have come to the term prejudicial for the first time. Okay, right. Say a company has 200 crore rupees with them. Say Growth Limited, they have 200 crore rupees with them. Now, how they can utilize this 200 crore rupees? One, they can purchase a plant and machinery. Right? They can purchase a new plant and machinery. Second, they can give the bonus to all their employees. Third, they can declare the dividend. Fourth, they can do an acquisition of a subsidiary company, or say they can use the money for research and development. Like you have 1,000 rupees with you, you can decide whether you want to have a coffee or buy a book, or you want to save the money or use for recharge of your phone or anything. You can decide how to utilize that 1,000 rupees you have. Right? So similarly over here, the company has 200 crore rupees and these are the multiple options which they have. Out of that, say company has decided to declare the dividend. They have decided what? That we will declare the dividend. So now as an auditor, what you need to check? Whether section 123 of the Companies Act, which talks about the sources of payment of dividend. Then the dividend has to be transferred to a separate bank account, and then it has to be paid within 30 days. Whether all the requirements of section 123 of the act have been complied with. Right? Or I come to know that company has decided to purchase a plant and machinery. So as an auditor, what I need to check? That whether the plant and machinery, whether the invoice is in the name of the company, whether the installation charges have they been added to the cost of the asset, whether repairs and maintenance has been charged to profit and loss account, right? Then whether the depreciation has been charged from the date the asset is ready to use, whether the schedule 3 disclosures have been given. As an auditor, this is what I need to check. Okay, but now as an auditor, I go for the audit and I come to know that this company, whatever 200 crore rupees they had, from that they decided to declare dividend. So what I need to check? I need to check the compliance with section 123. As an auditor, can I say that management, you have taken an absolutely wrong decision by deciding to declare dividend? It would have been 100 times better had you purchased the plant and machinery. As an auditor, are you concerned with the decision making of the management? Are you doing an audit of whether that decision is profitable or non-profitable? Whether that decision is prudent or imprudent? Are you concerned with the decision making of the management? No. This depreciation is not correctly charged. If they have purchased plant and machinery, then that auditor will report. Okay, depreciation is not correctly charged. Installation charges have not been added to the cost of the asset. But can he say that no, why did you purchase plant and machinery? You should have done research and development. You should have invested in a subsidiary company. No. That means what? As an auditor, the statutory auditor, the auditor of the company, he is not concerned with the propriety of business conduct. What do you mean by propriety? Decision making, not proprietary. This is propriety. He is not concerned with the decision making of the management. In CA final, we have a type of audit which is called as the management audit. In management audit, now we audit the decision making of the management. That time we said, management, why did you take this decision? You should have taken this decision. So there you are doing the audit of the decision making of the management. But here, are you auditing the decision making of the management? No. So as an auditor, as a thumb rule, are you listening to me carefully? As a thumb rule, as an auditor, are you concerned with the propriety of business conduct? No, you are not concerned with the propriety of the business conduct. So if that I apply to 143(1)(a), what did I tell you? 143(1)(a), whether loans and advances, are they properly secured? So company has given a loan of 10 lakh. And they have taken a security of 1,000. Actually, I should not bother, because I have nothing to do with the decision making of the management. I just told you, as an auditor, I am not concerned with the propriety of business conduct. So that means what I have to do? Let them give at 1,000 security. Let them give at 0.01% interest. Let the repayment schedule be 100 years. It doesn't matter to me as an auditor. So by default, does the auditor look into propriety? No. But wherever company law specifically tells you, okay, bhai auditor, over here look into the matters of propriety, then the auditor is going to look into the matters of propriety. So by default, I have nothing to do. But because company law has specifically put it in my duty, the auditor just check whether loans and advances inquire, are they properly secured, and the terms and conditions thereof, are they prejudicial to the interest of the company or its members. Because company law has told me, that is why I am inquiring, otherwise I would not have inquired. Because by default, auditor, are you required to look into the propriety? No. But then why you are looking into propriety over here? Because company law has told you. Simple. Are you getting that? Okay. Right. So whether loans and advances, are they properly secured, and the terms and conditions thereof, whether they are prejudicial to the interest of the company. Then whether transactions which are represented merely by book entries, transactions which are represented merely by the book entries, again whether they are prejudicial to the interest of the company. Transactions which are represented by the book entry. Can anybody give me an example of a book entry? Depreciation, goodwill, All provision, write-off entries, they are book entries. You understand? See, if I pass a purchase entry, sales entry, there is some activity which takes place, that I purchase the goods are received, payment has to be done. So that's not a book entry. But if I pass a depreciation entry, or I pass a write-off entry, or a write-back entry, or a valuation of inventory entry, then these are merely the book entry. So now book entry is also referred to as the journal entry. So then you say, ma'am, you know, now I've joined this company in the accounts department, and you know, they are using SAP. You know SAP, it is an accounting software. Okay, and you say, in my life, you know, right, SAP is an accounting software, not the SAP exams. Okay, here I'm talking about the SAP accounting software. You have Oracle and so many others. Okay. Right, so anyways, when we are talking about this journal entries over here, and now you're seeing the SAP software for the first time in your life and everything, and then you say, ma'am, you know, never in my life I have passed any journal entry. So I want to see how journal entries are passed. That is why what today morning 9 o'clock you came to office and you did a revaluation of the few of the assets of the company. And you wrote off the goodwill of the company, right? You increase the valuation of the work in progress of the company. And all of a sudden, company balance sheet started looking healthy. Oop. Healthy balance sheet. Yesterday, balance sheet of the company assets side total 1,000 crore. Today, 1,500 crore. Sitting, what to do? Pass journal entry. You said, what you did? They said, ma'am, no work today. I'd never passed journal entry. So I wanted to see. Because it doesn't require anything, no? Purchase sale of goods requires purchase sale to take place and a cash receipts payments to happen also. You're just sitting, you said, ma'am, the machinery of the company, this laptop which I have 1 lakh rupee. No, actual market value of it is 2 lakh. Now, how can ever a market value of a laptop increase? You understand? No, laptop always there has to be depreciation. There cannot be an increase in the value of the asset. But what you are doing, passing the bogus journal entry, fictitious journal entry. Why? Because you don't have any work. Sitting, what to do? Pass journal entry. See, do you need to pass journal entry? Yes. When a company declares dividend, it has to pass the entry for the dividend. When a company does the revaluation of asset, it has to pass the entry for revaluation of asset. When you do the valuation of your work in progress, you have to pass the accounting entry for your work in progress. But here what you did, without any reason, just passing the entries into the books of accounts. So transactions which are represented merely by book entries, whether they are prejudicial to the interest of the company. So what I do, I ask company, give me a list of all your book entries which you've passed during the year. And then I check whether they are fictitious or whether they are genuine. Is it right? Whether the journal entries are fictitious or whether they are genuine. Right. Next one. Where the company, array, listen to me, MCQ mein questions come. And if you've ever heard it carefully, you will be able to write the answers in the exam. Right, so where the company is not an investment or a banking company, that means this clause you don't need to make the inquiry for the investment and the banking company. So where the company is not an investment or a banking company. So investment banking company, in MCQ they ask this question, is a company dealing in shares and security? Then so you say it is an investment company. Then for that company, do you need to make this inquiry? No. Where the company is not an investment or a banking company, whether shares, securities, debentures, whether shares, securities, debentures have been sold at a price less than the price at which they were purchased by the company. Right? Where the company is not an investment or a banking company, whether the shares, securities, debentures have been sold at a price less than the price at which they were purchased by the company. That means for how much had you purchased the share, security, debenture? Say 100 rupees. And now for how many rupees are you selling it? You are selling it for the 80 rupees. Example, that means the company is selling their investments at a loss. That means they are selling their investments at a loss. As an auditor, you need to inquire. Okay, what is the hurry? What, any liquidity crisis in the company? Any financial crunch in the company? that you had to sell your investments at a loss? See, sometimes they will say the company is the company like Satyam or DH, any such companies like DHFL or so. So their ILFS or so. So there though it is better, no? Okay, if the value of security will go much more lower. So that is why before you book your losses at an early stage. But you see that here the price of the security is very good. There is no need for the company to sell also, but still they have sold it at a loss. So as an auditor, you inquire, okay, why shares, securities, debentures have been sold at a price less than the price at which they were purchased by the company. Are you understanding this? But this inquiry will you make for investment banking company? No, where the company is not an investment or a banking company. Okay, right. Now I say that I have given a loan to you. Right? Now, if you give a loan to somebody, right, it's a loan. So that means it might have some rate of interest, it might have a repayment schedule, there might be some security towards the loan and so. Okay, so what has happened is that I have given a loan to you. But what you are showing in your books that as if you have received a deposit from me. Now, is there a difference between taking a loan and getting a deposit? Yes, if you have received a loan from somebody and you said, नहीं loan नहीं लिया मैंने, उन्होंने deposit रखा है मेरे पास, and I have not taken a loan, they have kept a deposit with me. Does it not lead to window dressing? Does it not lead to window dressing? Like deposit when you keep, there is some admission, there is a non-refundable deposit, there is a refundable deposit over there, or some rent agreement, there is a deposit amount which you need to keep. So deposit ka nature is different, loan ka nature is different. And what you have done, you have given the loans and advances, but those you are showing it as the deposits, right? So whether any loans and advances, have they been shown as the deposits? Whether any loans and advances, have they been shown as the deposits? Okay, right. Then after that, 143(1)(e). Are you all with me? Right, now we come to 143(1)(e). What is 143(1)(e)? Whether any personal expenses, have they been charged to the revenue account? Whether any personal expenses, have they been charged to the revenue account? Right, personal expenses. Okay, so say the directors of the company, right, say the board meeting of the company is to take place in Germany, example. And the board meeting of the company is to take place in Germany, right? So all the directors of the company, say there are 10 directors in the company, will they travel from India to Germany? Right, for the purpose of attending the board meeting, right? Now again they are traveling, accommodation, conveyance, will that be taken care of by the company? Yes. Now say company policy says that you can also take your spouse along with you for attending the board meeting. Even this expense will be borne by the company. But though it is a personal expense, it is as per the company policy. So though it's a personal expense, is it okay if it is charged to the profit and loss account? Yes, because it is as per the policy of the company. Now what this director did, he went for attending board meeting to Germany. He took his spouse along with him. He took his, father, mother, brother, sister, son, daughter also along with him. And his mother wanted to get some knee replacement done. So knee replacement surgery also done in Germany. No problem, very good. You do the knee replacement surgery for your mother. But all that cost borne by the company. You understand? So now other relatives also taken, or medical treatment of the mother. I'm just giving an example. Medical treatment of the relative. Right. Now is this as per the company policy? No, this expenditure, though it now, see, even the spouse traveling, that was a personal expenditure. Even this medical treatment is a personal expenditure. But spouse travel, it was covered in the company policy. But medical treatment of the mother, is it covered in the the expense policy of the company? No, it is not covered. So that expenses, if they have been charged to the revenue account, it needs to be inquired into. 143(1)(e). Whether any personal expenses have been charged to the revenue account. Right? So so does that mean all personal expenses charged to revenue account need to be reported over here? Does that mean that all personal expenses charged to revenue account need to be reported over here? No, you need to look into the company policy. If it is allowed as per company policy, then okay, not as per company policy, beyond the company policy, then you need to do the reporting. You inquire, and then if you have an adverse finding, you do the reporting. Okay, right? Do you know that one, the shares of the company could be issued for cash, or second, the shares of the company could be issued for other than cash? Are you understanding that? Right. So what does it say? If shares of the company have been issued for cash, as an auditor make an inquiry whether cash is actually received. So if shares have been issued for cash consideration, then what does it say? Just check whether the cash has been received. And if shares have been issued other than cash, and shares have been issued without consideration, then in that case, what does it say? Auditor, you need to inquire whether the position shown in the balance sheet of the company, is it correct, is it regular, and is it not misleading? Is it correct, is it regular, and it is not misleading? Shares have been issued for cash, then whether cash is received, and shares have been issued for consideration other than that cash, in that case whether the position shown in the balance sheet, whether it is correct, whether it is regular, and whether it is not misleading. So you went for the audit and you came to know that 10 lakh shares have been issued for consideration other than cash, and these shares have been issued to a vendor, to a supplier, for the supply of the plant and machinery to the company. Right, so you purchased a machinery of say 10 crore or some 10 lakh or something, and then for this machinery you wanted to make the payment to the supplier, but supplier said, "Oh, I don't want money from you, just give me your equity, I will be happy." No, you have to pay to the supplier, no, for the plant and machinery which you purchase, but the supplier says, okay, if you give me the equity of your company. So what are you doing? Issuing shares for consideration other than cash. So when auditor went for audit, he came to know that like this, the 10 lakh rupee shares have been issued. So every day he goes to the client and tells client, I want to see that plant and machinery. They say, no, we have issued the equity to our vendor, and the vendor has given us the plant and machinery. So auditor, simple question. What simple question he has? I want to do the inspection, physical verification of the plant and machinery. What client says? Auditor, tomorrow morning. Auditor will show you the photograph. Auditor says, photo, nothing. I want to go and see. I want to see how it is being used in the production process. Then they say, okay, auditor, tomorrow morning. Then they say, auditor, it is 50 kilometers away, so much of heat, why you want to go? Auditor says, you don't worry, I am telling you very simple, I want to see your plant and machinery. They say, auditor, no, today that manager, he is on leave, we won't be able to take you today. Again, next day some story, again some story. And auditor says, I have only one line to say, okay, I want to see your plant and machinery. Simple. He says nothing, like I'm not asking you for anything beyond this. You've showed me the documents. I have only one requirement, that take me to that place wherever your machinery is kept and I want to see it. And client is not ready. They are not willing. Why? Because in reality, no plant and machinery which has been purchased. Simple accounting entry being passed in the books of account, plant and machinery account, debit to equity share capital account credit. Beautiful entry. Why? Because your assets of the company increase, your liability nahi, equity of the company increases. You understand that? So now, is the position shown in the balance sheet correct? No. Is it regular? No. Is it not misleading? No, it is misleading, right? So that is what you need to inquire, right? That is what you need to inquire. Are you understanding the 6 points of inquiry under 143.1? Right? So coincidentally, A for advances, B for book entry, C for company, D for deposits, E for expenses, and F for fixed shares. F for fixed shares, right? So 143.1, right? Duty as to inquiry. Would all of you make the noise, or some of you have learned it with the company with which you are sitting? Okay. No, I mean to say the gang over there. Right. Anyways, right? A for advances, B for book entry, C for company, D for deposits, E for expenses, and the F for the fake shares. Are you understanding that? Duty as to inquiry. Whether loans and advances are they properly secured, and the terms whether they are prejudicial. Then transactions represented by the book entries. Again, whether they are prejudicial. Then where the company is, where the company is not an investment or a banking company, whether shares, securities, debentures have been sold at a price less than the price at which they were purchased, whether loans and advances made by the company have been shown as the deposits, whether personal expenses have been charged to the revenue account, and where shares have been issued for cash, whether cash is actually received, and if no cash is received, then the position shown in the balance sheet, is it correct, regular, and not misleading? And do you always need to report on the points of 143.1? Do you always need to report on the points of 143.1? No, whenever there is an adverse finding, only in that case you need to report. Okay, now coming to 143.3, which is the duty as to reporting, right? So now how many points of reporting under 143.3? How many points of reporting under 143.3? 10 points. A, B, C, D, E, F, G, H, I, J. Right? You have the A to J over there. And what are the key words which we have over there? Information proper. Information proper. Branch books. AS adverse. Directors maintenance. Directors maintenance, and then IFC others. Information proper, branch books, AS adverse, directors maintenance, IFC others. Duty as to reporting. What is main bread and butter? True and fair view. Right? Then duty as to inquiry, 6 points of inquiry, and now 10 points of reporting. Duty as to reporting. And what are the 10 points on which you need to report on? Information proper, branch books, AS adverse, directors maintenance, IFC others. Right? Information proper, branch books, AS adverse, directors maintenance, IFC others. Is it clear to all of you? Duty as to reporting. Right. So now what is the first duty as to reporting? Right. What was the second right of the company auditor we studied? What was the second right of the company auditor that we studied? Right to obtain the information and explanation. So now auditor has to report under 143.3a. that whether he has sought, whether he has asked for it, whether he has sought, and whether he has obtained information and explanation which to the best of his knowledge and belief were necessary for the purpose of the audit, and if not, then the details and the effect on the financial statements. Right? So whether he has sought and whether he has obtained all the information and explanation which to the best of his knowledge and belief were necessary for the purpose of the audit, and if he is not obtained, and if he has not obtained, then what is the information he is not obtained, the details thereof, and what is the effect of such information on the financial statements. Like say client did not give you the inventory register. So the details of the information which is not obtained and the effect of such information on the financial statements. Are you understanding that? Okay. What is main bread and butter of the auditor? True and fair view. Then now this 143.3, what are these? These are the additional points of reporting by the statutory auditor. Look over here. As required by section 143.3. Is it right? Where am I? I am in Reliance Industries audit report. One of the section of the audit report is what? Report on other legal and regulatory requirement. So one other legal regulatory requirement is the CARO, the company's auditor's report order. And second one is what? As required by section 143.3. And what is the first point over there? We have sought, means we asked for it, and we have obtained all the information and explanation which to the best of our knowledge and belief were necessary for the purpose of our audit. Are you able to get that whatever we discussed is the duty of the auditor to report? Has that reporting been done over here? Yes. So what is the point number 1? What is the point number 1? Information. Okay. Then point number 2, that is the B point, whether the proper books of account. Oh, did we study anywhere right now? Okay, what do you mean by proper books of account? True and fair view, double entry system and the accrual basis of accounting. So whether proper books of account as required by law, have they been maintained by the company, and adequate returns for the branches, have they been received by the auditor? For branches not visited by us, whether the proper returns have been received, right? So whether the proper books of account as required by law and proper returns adequate for the purpose of the audit for branches not visited by the auditor. Right, so proper books of account. Right, then after that, can it so happen that a few branches of the company are audited by the branch auditor? Right, so now you have the head office and you have the branch offices. Okay, now the head office is being audited by the principal auditor or the company auditor, and the branch auditor, he will do the reporting on the branch offices. Okay, so now branch auditor, he needs to forward his report to the principal auditor or to the company auditor, and then the company auditor, considering the reports of the branch auditor, he will issue the final report to the shareholders. So branch auditor, does he directly report to the shareholders? No, branch auditor reports to the principal auditor, and then principal auditor, considering the reports of the branch auditor, he issues the final report to the shareholder. So what is 143(3)(c) over there? Whether the report on the accounts of any branch office of a company audited under section 143(8) by a person other than the company auditor, that means branches are being audited by the branch auditor, whether the report has been sent to him means the company auditor, under the proviso to that subsection and the manner in which he has dealt with in preparing his report. Simple. Whether branch auditor's report, has it been forwarded to the company auditor? Whether the branch auditor's report, has it been forwarded to the company auditor, right? So that is the branch, right? So information, whether they have obtained information, whether proper books of account have been maintained, then whether the branch auditor report have been received by the company auditor, then whether the balance sheet and profit and loss account, are they in agreement with the books of account, right? You know, these are the books of account of the company. On the basis of books of account, you need to prepare the financial statements. Is it right? These are the books of prime entry, ledger, journal and all of that. Based on that, you need to prepare the balance sheet, the statement of profit and loss, the cash flow statement, the statement of changes in equity and the notes of the company. Okay. So now, how does the balance sheet, where do the numbers, like say there is inventory in the balance sheet. You know, this number of inventory will come from the schedule. You know, there will be a schedule. You understand schedule? Which gives the details of each and every item in the balance sheet P&L, right? So in the schedule also there will be the inventory. Now in the schedule, this number will come from the trial balance. So in the trial balance also there will be the inventory. In the trial balance it will come from the ledger. So in the ledger also there will be inventory, and then you will have the books of the prime entry, in which again you will have the inventory entries being passed over there. Are you understanding that? Say the inventory of the company at all these places is 200 crore, just as an example. And say it is 200 crore. Right, say these are my different papers, so now because this is balance sheet, say let me call it as the BS1, BS1, this paper I call it as BS1, this is schedule, so let me call it as S1, this is trial balance, so TB1, ledger, so L1, and this is the books of the prime entry, so say E1. Okay, now listen to me very, very carefully. What I have written over there, inventory 200 crore. On the left hand side, you give the incoming reference, and on the right hand side you give the outgoing reference. Okay, so now from the book of prime entry, where is the amount going to? It is going to the ledger. So here I'll giving the outgoing reference of L1. Now in the ledger, from where it is coming? prime entry. So here I will write down E1, and from the ledger where it is going to trial balance 1. Is it right? Now in the trial balance, from where has it come? Ledger 1. From where it is going? It is going to the schedule 1. Now in the schedule 1, from where it has come? Trial balance 1. Where it is going? It is going to the balance sheet 1. And in the balance sheet, where it has come from? Right, the S1. And obviously there is no outgoing. This is the final document over there. Right, so now, can I say in this case that yes, the balance sheet and profit and loss account are in agreement with the books of account? Okay, what is shown in the books of account, same thing is reflected in the balance sheet, profit and loss account of the company. Are you understanding that? I am telling you, many companies, their management, for preparing the financial statements, they don't require the books of account. You say that financial statements are to be prepared. They say, don't worry, I will prepare it. You say you want books of account. They say, nothing. You just tell me 2 things. What 2 things you tell me? Okay, how much tax you want to pay and how much profit you want to show. Tomorrow, the books will be ready. Don't worry. You understand, no? What sales is over here, what purchase is over here, what expenses are recorded, nothing. It has nothing to do with what is shown in the financial statements of the company. Will such financial statements give a true and fair view? No. Will they give a true and fair view? No. So one of the duty of the auditor is to check whether the balance sheet and profit and loss account, are they in agreement with the books of account of the company. And so for that you need to do the comparison with the underlying records. Are you understanding that? For that you need to do the comparison with the underlying records. Are you getting that? Okay. Right. Then what is the next point which we have over there? Right. So the next point is the AS. Whether the financial statements comply with the accounting standards. So whether the auditor, you need to report whether the financial statements comply with the accounting standards. Then, if any term comes to your mind, please tell me for the next one. F. And what does it say? Any observation or comments. Any observation or comments which have an adverse effect. Any observation or comments which have an adverse effect on the functioning of the company. No, that's not prejudice. No, that is okay. Okay, there if it's adverse, you need to report. No, listen to the last 3 words over there, last 4 words. Any observation or comments which have an adverse effect on the functioning of the entity. Functioning, okay, you observed something which you think has an adverse effect on the functioning of the entity. You know this term in accounts. We just discussed it few minutes back. Not propriety. Okay, you say, oh my God. No. Why prejudicial? Nothing of that sort over here. Any observation or comments which have an adverse effect on the functioning of the company. Like, I don't want to say anything wrong, but say all of a sudden if there is a power cutout, it will affect the functioning of the class, right? Okay, so now similarly in the company, you have any observation or comments which have an adverse effect on the functioning of the company. In simple words, that means there is a concern regarding the what functioning के लिए मुझे alternative term चाहिए, simple. For functioning, I want an alternative term. There is a concern regarding the dash concern of the concern. अभी देखते हैं क्या करते हो तुम लोग. अब तो बोल ही दो, अब तो हाँ, going concern. Oh my God. So you need to check whether there is any concern regarding the going concern of the concern. है ना? Company had 100 customers. Out of that, 90 customers have left their contract with the company. It has an observation or comments which have an adverse effect on the functioning of the entity. So that means there is an uncertainty regarding the going concern. You know, if, what do you say, airline companies? Which airline company you know? Go first, now it is go last. Sitting over there, bankrupt. Okay. Right? Yes, SpiceJet, Indigo, that's the only one surviving, Vistara or so. And so now, Go First is an airline company. And say they have filed for the bankruptcy. Right? They have filed for the bankruptcy. Their aviation license has been cancelled. Does it not have an adverse effect on the functioning of the entity? Right. So any observation or comments which have an adverse effect on the functioning of the entity. Right. Then next one. Whether any directors of the company, you know directors? Board of directors. Whether any directors of the company are disqualified. You know yesterday whose disqualification we studied? Auditor. Now here they are talking about the director disqualification. Whether any directors of the company are disqualified under section 164(2). What is 164? It is regarding the disqualification of director. Right? So whether the financial statements comply with the AS, any observation or comments which have an adverse effect on the functioning of the company. So this is mainly the concern regarding the going concern. Whether any director is disqualified under 164(2). Right? So whether any director, auditor you need to report whether any of the directors of the company are disqualified. Right. Then after director, what is the next point over there? Maintenance. What does it say? Any qualifications or adverse remarks regarding the maintenance of accounts. So did you notice something? Did you notice something? That 3 points are there regarding books of account only. Proper books of account. Then whether balance sheet, profit and loss account, are they in agreement with the books of account? Then any qualification or any adverse remarks regarding the maintenance of books of account. Okay, they are not maintaining the books of account properly. And any qualification or any adverse remarks regarding the maintenance of the accounts. Okay, right. Then yes, yesterday we talked about 2 types of audits. What are the 2 main types of audit that we talked about? Statutory audit and the internal audit. है ना? Statutory audit and the internal audit. Statutory auditor, he expresses an opinion on the statutory auditor, he expresses an opinion on the financial statements. Internal auditor, he expresses an opinion on the internal control system. In company law, you have a term called as the internal financial controls, IFC. We will come to the definition of IFC later. But internal controls relating to finance is internal financial control. So whose responsibility to express an opinion on the internal controls? The internal auditor. What is statutory auditor bread and butter? To express an opinion on the true and fair view of the financial statements. This is given under section 143(2). But under 143(3)(I), what does it say? It has been put into the additional reporting responsibilities of the auditor. Though you are statutory auditor, it has been put in the additional reporting responsibilities of the statutory auditor. Okay, whether the company has adequate internal financial controls and also the operating effectiveness of such controls. Whether the company has adequate internal financial controls and whether these internal financial controls, are they operating effectively? So again, a very important new term we are seeing over here, OE. What is OE? Operating effectiveness of the control. Auditor, you have to express an opinion on the operating effectiveness of the control. Like yesterday we saw one term, TCWG. Yesterday did we see a term called as TCWG? Those charged with governance, highest level of management in an organization. Similarly, now we see this term OE. What is OE? Operating effectiveness of the controls. Okay, listen to me very carefully. Right, when would you say that the controls in an organization are operating effectively? When would you say that the controls in an organization are operating effectively? For that, you need to check the design, you need to check the implementation, and you need to check the maintenance of the controls in the organization. Right? Then if all these three ticks are there, then you say that yes, the controls in the organization are operating effectively. Right, so what is design? It says whether a policy has been designed. There should be some control. Control means there has to be some policy, there has to be some procedure. So say the policy in the company is that all purchases should be authorized by Mr. A. Example, Mr. A. Any purchase to be made by the company, who should authorize it? Mr. A. So has a policy been designed? Yes. Then whatever policy has been designed, whether it has been implemented. So what you need to see, that Mr. A, whether he has been informed that see A, it is put in your role, it is your responsibility that whatever purchases the company makes, you authorize them. So whatever policy has been designed, it needs to be implemented. And now say we are doing the audit for the year 1st April 2025 to 31st March 2026. Okay, now during this period, say the company made 1,000 purchases. In the full financial year, say the company made 1,000 purchases. Whether all the 1,000 purchases, whether all the 1,000 purchases, have they been authorized by Mr. A? Then you will say that there is the maintenance of the controls. Without design, there cannot be implementation. Without implementation, there cannot be maintenance. So what are we talking about? DIM. What is DIM? Design, implementation and maintenance of the control. Classic example to correlate DIM of controls is your timetable. Have you prepared a timetable? Yes? Design. Have you started studying as per the timetable? Yes? Implementation. Did you follow the timetable for the entire period for which you prepared it? I don't know. Then that is maintenance. Are you understanding that? DIM, design, implementation and the maintenance of the controls. Are you getting that? Design, implementation and the maintenance of the control. So that is the operating effectiveness of the control. Right. So whether the qualification, adverse remarks regarding the maintenance of accounts, and whether the company has adequate internal financial controls with reference to financial statements and the operating effectiveness of such controls. Are you understanding this term? So though you are statutory auditor, internal audit free, though you are statutory auditor, it has been put in your other reporting responsibilities to report on the internal control system. So is it complementary that you have to do you will charge the fee, but then do you have to do it also? Yes, you have to do the internal audit also. Only then you will be able to check the internal controls, express an opinion on the internal controls in the organization. Okay. However, in case of which companies the statutory auditor need not do the reporting of 143(3)(I), and where IFC reporting is not required to be done. What does it say? Where IFC reporting is not required to be done in case of a private company, which is a one-person company or a small company, or a private company having the turnover of less than 50 crore and having the borrowings of less than 25 crore. What does it say? No IFC reporting to be done by the statutory auditor. Listen to me, this is a favorite one for the MCQ. No IFC reporting is required to be done by the statutory auditor. Do these companies also need to have IFC? Do these companies also need to have IFC? Yes, but is auditor required to report on IFC? No. 143(3)(I) is not applicable. Okay, so let me ask you a question. A private limited having a turnover of 39 crore and having the borrowings of 39 crore. Is IFC reporting applicable or not applicable? Logic, use ना brain, own brain, you can use your own brain. तो and का क्या है भाई, मतलब apply the concept correctly. Is IFC reporting to be done in case of A private limited? मतलब seriously, you've decided that you will not apply your rationality? Huh? Yes or no? Is statutory auditor required to do the reporting on 143(3)(I) in case of A private limited? Array, if both amounts are within the limit and if turnover is less than 50 and borrowings are less than 25, then no need to do the IFC reporting. But one of the limit exceeded and you have to do the IFC reporting. You understand that? Yes, so IFC reporting, is it applicable? हाँ, तभी वो exempt होगा, exactly, okay. Are you getting the point over here? Right, so this is a favorite one for the MCQs, okay. Right, so not applicable to a private company which is a one-person company or a small company or a company which is having a turnover of less than 50 crore and which has the borrowings from banks, financial institutions or any body corporate at a point of time during the financial year less than 25 crore. And the above exemption shall be applicable to a private company which has not committed a default in the filing of the financial statements or the annual return with the registrar. Yesterday where we saw this? No default in the filing of the financial statements and the annual return. 141(3)(G). And what you say, ceiling of 20 audits per person, excluding the audits of the private companies having paid up share capital of less than 100 crore, provided there is no default in the filing of the financial statements or the annual return with the registrar. Okay, right. So what are we seeing over here? 143(3), right? Information proper, branch books, AS adverse, directors maintenance, IFC and others, right? IFC and others. Are you understanding this? What is A? Whether the auditor has obtained information and explanation, then whether proper books of account, then whether branch auditor report has been forwarded to the company auditor, principal auditor, whether balance sheet, profit and loss account, are they in agreement with the books of account, whether financial statements comply with the AS, any observations or comments which have an adverse effect on the functioning of the company, whether any directors are disqualified under 164(2), any qualification adverse remarks regarding the maintenance of accounts, whether the company has the adequate internal financial controls and the operating effectiveness of such control, and such other matters as may be prescribed. And J, what is J? Such other matters as may be prescribed. And under 143(3)(J, see how interesting life is. Generally you say others means kuch nahi hoga, hai na? Others means there is nothing over there. But here etc, nothing over there as such, nothing yet notified over there. But here under 143(3)(J, you have A, you have B, C, D, E. In E you have E1, E2, E3, F and G. Okay. 143.3J. So how the reference comes, are 143.3J E3. Oh, yo. 143.3J E3 of the Companies Act 2013. Okay, so such other matters as may be prescribed. Auditor, what you need to report? Whether the company has disclosed the impact of pending litigations. Whether the company has disclosed and litigation, pending litigations. You understand? Legal cases, contingent liability, fighting with GST department, income tax department, litigations are going on, labor litigations are going on. So whether the company has disclosed the impact of the pending litigations in the financial statements. Then whether the company has disclosed the impact of the material foreseeable losses. Right? Material foreseeable losses. Right? On account of the forward contracts also, any material foreseeable losses. Then whether there has been any delay. Auditor, you need to report. What you need to report? Whether there has been any delay in transferring amount to the investor education and the protection fund. Yes, so MT. Oh, you don't know MT so far. Let me write down material. And MT. Pending litigations, material foreseeable losses, delays in transferring amount to the investor education and protection fund. So auditor, what you need to report? Whether the company has disclosed the impact of any pending litigation. Whether the company has made the provision. So here disclosed, here made a provision for the material foreseeable losses on the long-term contracts including the derivative contract. Whether there has been any delay in transferring amounts required to be transferred to the investor education and protection fund of the company. Right? Then once upon a time, what had happened? 500 rupee note, 1000 rupee note, demonetization. Right? And then you had to deposit them in the bank account and so. Right? So now, if the company is at that point of time when demonetization happened, it says if the company is having any such specified banknotes, they were called as the specified banknotes. What does it say? Whether the disclosures of the same have been given in the financial statements, in the notes to account. And at that point of time, limited period of time, the disclosure requirement had come. Auditor had to report whether company has done the disclosure of the specified banknotes. But that was only relevant when the demonetization had come. So now it is not relevant. That is why the clause D has been omitted. But it was regarding the specified banknotes. Clause D, now it has been omitted, but it was regarding the specified banknotes. Are you understanding that? Then 143.3J and then coming to F. E we will come to it later. Right? What is the F over there? Whether dividend paid or declared during the year, whether it is in compliance with the provisions of section 123. So whether dividend paid or declared, whether it is in compliance with the provisions of section 123. Right? Whether dividend paid or declared, is it in compliance with the provisions of section 123 of the Act? And what does it say? Whether the company's accounting software, whether the company's accounting software, like I told you, SAP is an accounting software, Tally is an accounting software, whether it has an audit trail feature. What is audit trail? Where you are able to trace the transaction. Okay, on what basis this entry was passed in the books of account? Whether the company has an accounting software which has an audit trail feature and which has been OTP. What is OTP? It has been operated throughout the year. So this accounting software has an audit trail feature which was operated throughout the year, not that CCTV camera kept on one day and then after that changed the face of the camera. No, it operated throughout the year. The audit trail feature, it has not been tampered with. Don't write tampered with. It is not been tampered with, and it has been preserved as per the statutory requirements for the record retention. It has been preserved. What has been preserved? The audit trail has been preserved. The accounting software has an audit trail feature which has been preserved as per the statutory requirements for the record retention. You're not saying anything? Whether the accounting software has an audit trail feature which has been preserved as per the statutory requirements for the record retention. That means, simple, no? It should be preserved for 8 years. Abhi padha tha na, books of account is to be preserved for 8 years. So even this audit trail has to be preserved for 8 years. Are you understanding this? Right, so dividend paid or declared, yes, so 1D has been omitted. Then whether the dividend paid or declared by the company, whether it is in compliance with section 123, and whether the accounting software has an audit trail feature which has been operated throughout the year. It has not been tampered with, and it has been preserved as by the company as per the statutory requirements for the record retention. And then after that we are left with the E1, E2 and the E3. Are you seeing those over here? The E1, E2 and the E3. Right. So once we will complete the 143, then come to section 147, which is regarding the punishment for the non-compliance, and then come to 148, which is regarding the cost audit, and then after that begin with the CARO. Okay. So see you in the next class. Bye.